It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? I hope you're all doing well. So pretty much in this video I'm going to be recapping pound yen. Now, I didn't take the trade as I was 2 pips, literally just a little bit under 2 pips from my sell limit, which is very annoying. However, looking back on it, I wanted to recap it as I wanted to spread quite a lot of knowledge, because it was a beautiful trade in terms of textbook and, you know, how I managed it as well. Obviously, you know, it wasn't in the trade, but how I would have managed it is how I usually manage my trade. So I thought, why not recap it, right? And I know one of you caught it as well, because I got a message on Instagram, which is absolutely fantastic. But yeah, I'm going to just recap it now. I want to show you proof, as always, that I actually, you know, put it there and actually wanted to get into the trade. So there's this thing as well. I'll cover that in a minute. But as you can see, very simple. I'll let it play out, right? You can see it was literally not even 2 pips off my sell limit, which is, you know, very annoying. So yeah, what that is, if you're wondering as well, is if you go to publish idea, you can actually set it to private. Obviously, you got public and private, but okay, I've never seen that before. But yeah, if you go over to the private, you can publish a private idea and category, and you know, whatever you want to do. And I think it's just a very good way to journal your trade. You know, because I don't know, I just think it's a great way to journal. I think especially if you're in the moment as well, it's hard to just try and write it down on different websites. So I think it's just very easier to, you know, type in pound yen shorts, and it will show you the before and where you're looking to enter and whatnot. But yeah, you know, like I said, I didn't take the trade. I'm not going to sit here and say that I took it, because a lot of people would let's admit it. You know, but for me, I'm going to keep it real with you guys. There's no fluff in here, and I just genuinely did not take the trade. It was 2 pips off my sell limit, which is very annoying, but it is what it is. And you know, we just live and we learn. We move on to the next trade, right? So with 3 simple things, we've seen a contraction, manipulation, expansion. But why not? Let's go on to a fresh chart actually. And let's just remove all of this, and what we'll do is we'll start from the top down analysis perspective, and I'll just explain everything. Okay, so let's jump into it. So on pound yen, we're looking for short. So the reason for that being simply because we were previously trading bullish, but we came back down. We violated this demand zone, but also broken structure. So at this point, we have a chart also known as a change of character. Now at this point, we created a new low, created a new high. We, you know, obviously respected this supply zone, which is a great sign of, you know, bearish order flow. And we came back down, and we broken structure here, right? For some reason on the Awanda chart, it doesn't show a break of structure, but it does on here, which is good, I guess. So we broken structure, and also we broken structure here. So that was really confirmed, you know, the bearish order flow. So as you can see, price is moving down. We took out previous structure here, which obviously we have a bearish intent. We really confirmed the order flow here, and obviously we, you know, just confirmed it. And you know, we're just pretty much trading sort of bearish now. So you know, looking at those sells on the higher time frame, from higher time frame point of interest, is much more preferable. Okay. What I will do is, as well as I'll go back here and get rid of today. All right. So the next up, we have obviously on the daily time frame, we have our low here, which would be our daily range low. So we know we always want to make sure what range we are trading in. So that would be our daily range low, and that would be our daily range high. And then on, obviously from there, we were pretty much just trading between ranges, but we were also respecting, you know, the supply zones. So you know, obviously in terms of supply and demand, it's you use this as a wick trick actually, and drag it across. So you know, supply zones are being respected, which is great. Demand's being violated, so obviously confirms that bearish order flow. Price came back up, tapped into it, a short-lived move, came back up and tested it again. Most likely something on the lower wick here, you know, on this wick here, tapping into on the lower time frame. But you know, we're focused on what's on the current price. So now we've identified what order flow is on a higher time frame. We can go on a 4-hourly and just do the same process. So as you can see on the 4-hourly time frame, you can go ahead and mark up your highs and lows. We just follow the price up now. So we have a low here, we have a high, right? So we go ahead and make that as our 4-hour range high, and obviously this is our 4-hour range low. And at any time as well, if you feel like I missed something out that's on my plan, but I haven't put on here, you can just send me a message and ask me questions about this as well. But as you can see, price broken structure to the upside, so we're bullish on the 4 hourly. We have a new high, we have a new low, broken structure to the upside, new high. We go back in time, new low, new high. If you're wondering how to market your highs and lows, I've done quite a few videos of this, both in the course and in the Discord, so you can go ahead and check that out. And obviously from there, we broken structure to the upside, got a new low, got a new high. Well, actually this would be our low, sorry. Broken structure to the upside, got a new low, got a new high. Now at this point, we started to see the zone flip. This is obviously what created this sort of zone flip, so price came back and traded into that breaker. So you can go ahead and take this as a whole range where price obviously violated that structure and broken to the downside, and then from there price created a new low, so we're now considered bearish. But at this point we have an intent, so a chalk, so change structure or change a character, and then we have a high, we have a low, price broken structure to the downside again, really confirming that bearish order flow. Okay, so we have a new low and we also have a new high. Now at this point what we can do is just go ahead, well actually on the Awanda chart, for some reason I might switch to FXCM because it's a lot better, but on the Awanda chart price didn't break structure here, it was just wicks, but it did on the FXCM, which is good. And then from here we pretty much just had price break to the upside, so we do have a bullish intent. However, on the Awanda chart, as you can see here, right, you can see it didn't break structure below this low, so that kind of threw me off thinking about it now. But obviously we do have an intent, so we know that price could potentially reverse. And also another thing to note and point out here as well is that we do, if we just actually what we do is we put price, we'll go back here, right, and then from there obviously price broken to the upside, so we do have an intent. But due to yesterday's rally in price, we did see this huge imbalance left behind, so that's a good area that price will potentially tap into that area later on, right? So as you can see, we have a supply zone up here in which we're looking to sell from. But what we can do is just go down to the hourly time frame and just refine it. Also, another thing to note is obviously our 4 hourly high will be up here somewhere. I'm just going to keep it there for now just because it'll be around the same price. And obviously this is our 4 hour range low, which we're looking to trade down into long term if the trade allows us to. Okay, but obviously with it being a Friday, I'm not looking to hold long-term trades. I'm just looking to get that few percent and get out. I don't really like trading Fridays, especially going to later in the day, so I prefer to just trade a learner session, right? So at this point what we can do is go ahead and just refine this order block, right? And then from there, as you can see, we also have this Asian session. So if we just go down to the 15-minute time frame, and also what you can do as well, you can also go ahead and keep up the hourly highs and lows. But for me, I'm just going to keep it on the 4 hourly and the daily for now, and obviously the lower time frame as well. At this point you can see here that we also have this high and we also have this low, right? So that is our bearish, that is our Asia high and our Asia low. Go on a 5 minute, just let price play out. And as you know, what we're looking for is when price obviously breaks to the upside of the Asia high. So say for example this is your Asian range, price breaks to the upside, we're instantly looking for sales. We have that sell bias and we're looking to sell, right? If price breaks to the downside, we're going to look to buy. Simple as that, right? I got much more in depth about this in the course. Make sure you go ahead and look at that if you're obviously watching the course. I explain a bit more in depth in the ZTFX method, and it's obviously the base of my trading strategy or system, whatever you want to call it. Now at this point, again, we're just simply waiting for a breaker structure above or below. If we break above, then great, we could look to obviously sell from this supply area. So obviously once we break structure on a 5 minute, that'll be a great sign, right? So just go ahead and let price play out. We tapped into the lows. If I just go ahead and just refine it across, right, we're tapping into those lows. We seem to be targeting those highs, just sort of ranging, descending channel. We should see like some sort of breakout. So in terms of looking at this as a pattern, you see the impulsive move, correction, and obviously an impulsive move. But obviously we don't trade all that. We see this as liquidity, and all this here is just liquidity waiting to be collected when we see the downward move, if we do. Now we just let price play out, right? You can see we've broken to the upside. So now all we're simply looking for is a lower time frame execution. You can see price obviously tapped into supply area. So what we could do is go onto the 1 minute time frame and look for a break of structure. Right. We haven't broken structure just yet. Now we have. Okay. So at this point we got a bearish break of structure, especially on the 1 minute and the 5 minute as well. And what we're looking for now is simply, if we just discuss this here, three things happened. We had a contraction, manipulation, quote unquote liquidity grab, and also a potential expansion, which we'll just let price play out now. Okay. So as you can see, we also took out these lows, and so on as well. We haven't took out those lows just yet, but we took out this low and this low. So we can go back to the 5 minute time frame and just mark up this order block, and that is where we're looking to simply sell from. We could set a selling order there. Our stops just above there, which would be around 8 pips. Then obviously look to target the 5 minute lows, which we'll look at in a second. Right, but before I jump onto that, I just wanted to say, if you look at this, this is a little entry technique you can use. This, you know, pretty simple in terms of what we're looking at. Now, if we look at this move here, we just see that price is just sort of ranging. So ignore what's going on here, right? We're just looking at what's going on here. We can see that price is just sort of ranging, right? We're just generating, I suppose you could say, some sort of resistance and some sort of support here, like rejection area, right? And from there, it's just sort of generating liquidity. Now, this is known as, obviously, when we look at ranges in terms of the smart money methodology, we know it's known as a contraction, right? And then from there, what did we see? We also seen a liquidity grab to the upside, which is just sort of like a grab before quite an aggressive move to the downside. And now we did come back up, but I'm sure we pretty much just tested something inside on the second time frame. And if you have the access to that, you can go ahead and check it. Now we also, if we just take a look here, this would be our manipulation, quote unquote liquidity grab. So LG, not an LG TV or anything like that, just a liquidity grab. And then obviously from there we had this nice expansion, which we can go ahead and put that as our expansion. I can actually spell it. Right, so that three things, very simple. We have a contraction, manipulation, expansion. Right, what we're looking for next is a compression back into our supply area. So we can just go ahead on the 5 minute time frame and just wait for price to play out. Okay, so we've broken structure, we actually broken these lows. So what we can do is actually go ahead and mark up our 5 minute high and low. So that'd be our 5 minute range low, 5 minute range high. Right, so we just go and follow price. Broken structure to the upside here. So we have our high, which would be up here, and our low, if we go back in price, would be here, which obviously got taken. So this would be our new low. Now, what we can do is just go ahead and wait for price to pull back to our supply area, and that would be a valid entry signal. Now you must remember, at this point it is like entry 1, so we do have sort of a bearish intent. However, we did tap into obviously a supply area. We sweep the Asia highs, and obviously we took the liquidity from the Asia highs, tapped into high time frame supply. We're looking for that low time frame confirmation entry. Right, now I don't really recommend taking entries off base of entry 1, but in this case it's very different because it's a higher time frame point of interest. Remember that, right? So entry 1 is more, good, right? So what we can do as well, we'll just wait for price to pull back, but we can start to measure the momentum once we are pulling back into that area. So we just let price play out. We're expecting demand in this point. We can actually start to draw up our momentum. So it'll be from this move here, 6 bars, and from there, which should be around the current price, which is 25 bars. I'll just let price play out. Right, we tapped into that area now, and obviously in terms of momentum, you can see that it took 36 bars for price to reach this area. So yes, the momentum is extremely bearish. Right, obviously our other confluences in terms of discount premium pricing, we are obviously buying at a premium as always, selling at a premium as always, sorry. And now in terms of a sell limit or market execution, you could either enter there with, after the bearish candle with your stops above there, or just above the imbalance. And that's another thing I forgot to mention as well. If you look at this imbalance in price, right, you're probably wondering, well, which order block should I choose, right? Or should I go with the 5 minute, or should I refine it to the 1 minute, whatever, right? Excuse me. Now, if you just look at this imbalance in price, if we just drop the, where is it, the fib tool, right? You can see it lines up with the, the open of the 5-minute order block. So that's the extra, confidence that prices potentially, going to reverse from there, right? Because if you look at this slight imbalance over, it's not really there's a little gap there, but it's not the biggest, sort of imbalance compared to this one. This is where the liquidity is, really at, because that's the bigger imbalance. But from a sell limit point of view, we'd have our stops above there around 8 pips, 7.8, that'd be fine. And then obviously that's a sell limit, so we'd be in the trade. But obviously if you wanted to enter off the bearish, sort of price action, you can do so. Or if you have, the seconds time frame, you can go ahead and look for a second time, 15-second entry, which would be like, something trading this wick here from an order block here, and that's fine. Now at this point, what we're looking for now we're in a trade is simply, we're looking for a break below the lows, because we have that as our low, and we have this as our high. So we're just going to anticipate, lower prices. What we can do is, as a rule of thumb, just target the 5-minute lows, and then from there around the area, when we start to pull back, we can look to take off partials, or if you have a special way of taking partials, it's up to you. But I'd preferably look to take off partials at the next area of where the real liquidity is, or where the 5-minute low is. Right now, we're just going to wait for a break below the lows. We did pull back to sort of break even, but obviously our stops are in the same place. Now we've broken the lows, we can go ahead and just make this minor adjustment, send that to the back. This is our swing point. Alright, we also have broken structure, so we can't really say where our swing low is going to be. And in terms of what I mean by swing points, it's just like high highs and high lows. So obviously once price breaks structure, we have our high, low here, high here. Once price breaks structure, we have a low, we have a high. Okay, and this is how I manage my trade. So price continues to do this, right? And then what it does is, if price starts to pull back and it closes above the previous structural point, that's when I'd close my trade, and I'll show you exactly where I close the trade. Okay, so we're still in the trade. We have a swing high here, so we know if price is going to pull back and close above, we can exit the trade at a small loss. Because remember, you always want to cut your losses short. Even if it come back into that area and then it rallied off, you'll still thank yourself because you're following your plan. So just going to wait for price to form a pullback, which we did get here. So what we can do now is wait for a break of structure below the lows before looking to move our stops. So we've got a break of structure. We also have a new swing high, right? Then from there, what we're going to be looking at is also moving our stops to around break even, right? So our stops would be at break even, just simply because that was the previous swing high, and we know if price is truly, bearish, and we shouldn't be breaking up at the highs. But if you come back up and break above this high again, we'd close the trade at a small win, right? So again, we're just going to look for price to form a swing point, swing low. We can take partials around this area, it's completely up to you. Right, you can see we did form a minor swing low and a minor swing high, in which we can go ahead and just trail that there, and we can move our stop loss above the previous structure point, which would be there. And we know if price is going to break above this high, we'll close the trade in a win. We'll wait for the swing point to form. We also broken up at the 5-minute low as well, so we can go back to the 5-minute time frame and just make that sort of minor refinement. And this is, I will do a video on this at some point. I do have multiple videos coming out in the course. I also have a lower time frame mastery. There's also a lot of videos I want to add to the course, but I also want to add a video in terms of how to scale. If you're scalping on a lower time frame, how do you get those trades into a swing trade and look for big returns? And that's something I'll break down. It's a very simple method that you can use, and it's something similar to this, and I'll explain it thoroughly now. So when price breaks a 5-minute low and we start to break the 5-minute lows, what we can do is just go ahead and manage it on the 5-minute time frame now. So if price was to pull back from here on the 5-minute and pull back again, we can have that as our new 5-minute high. Then obviously if it does that, break a structure, we can go ahead and have that as a where is it now? A new 5-minute high, right? Move our stops there. And then obviously what we can do from there is go down to the 15-minute time frame and do the exact same process. If you take out an hourly low to the 4-hour low, and if we just continue to do that, this is how you can allow your trades to turn into the big trades. So a lot of you probably haven't known that, and that's something you can do. But we'll just let price play out. What we can do is go back to the 1 minute time frame actually, and just look for the swing points, right? So obviously at this point, we have our stops above the previous high. We broke in structure. We didn't really form any sort of swing points here. We just sort of seen a continuation or block. But however, if we look at this here, this is obviously a few candles, and it's, you know, obviously if you look on the line chart, you can see it's a bit more. You look at these as small, right? But if you look at this one, it's where actually price stopped and thought about coming up, but continued, you know, bearish because the order flow was bearish. So that would obviously be our high, and we'll remove the low. We don't need a low for now, but obviously we would need a breaker structure below this low to continue bearish, right? But what we can do as well is just go ahead and move our stops just above there, the previous swing point. Now at this point, even if we did come back and get stopped out here, we're still taking 2.22% home, which is great. But obviously we would have took partials at these lows, the 5 minute lows, and anticipated lower prices. But obviously it violated it, so you know, you probably would have took partials here, close at half the trade or a quarter of the trade, and however you don't want to take partials. Also, another thing as well, what you can do is if you just go back to the 5 minute, we can always look left and see where price is currently at. If we look at this, we can also see there's an imbalance in price here, which hasn't been filled, so we know price could potentially come back and tap into that, rebalance itself, and potentially reverse from there. Also, it lines up with this sort of, you know, supply area which was previously violated from this structure, so sort of like a breaker supply to demand. It lines up with the imbalance, so that would be a good area to sort of take more partials from, right? Because we've broken below these lows, so these are irrelevant at this point. So let's go back to the 1 minute time frame and just see what price did. I think this is where it actually broken above, to be fair. Yeah, we're starting to sort of create this you know, push up and violating this supply, respecting this demand here. We've ignored, you know, reaction. We had a slight reaction from this imbalance, but you know, we sort of came up into this area, you know, we respected this demand zone, right? And obviously we continued to come back up, so I think we do end up closing the trade around here. Yeah, so we would have closed the trade there, which would be a nice 4.97%. You would have took partials, so maybe a slightly bit less, but you get the idea, right? Now at this point, we're out the trade. It was a nice win, 4.97%, and we're done for the day. So yeah, it's up to you what you want to do from here. I mean, you can go ahead and look for scaling opportunities, but for me, you know, I would have been done for the day. Obviously, I didn't enter the trade. It was 2 pips off my sell limit, but the direction was there. The entry was pretty much there. And I decided I thought I'd share it because I know one of you guys caught this as well. You sent me a message on Instagram that I'll share later on my Instagram. But yeah, you know, it was generally a decent day. It was a nice setup. I've been enjoying trading Fridays lately, so I think this is going to be something that I start trading every Friday now. So I'll obviously share it with you guys. But yeah, you know, this week in general has been a slow week, so apologies for that. But we are going to pick up next week. I can guarantee it, just because this week, you know, it was a very odd week, but you know, like I said, we'll come back next week and we'll smash it. So, you know, I'll send a breakdown on Sunday or Saturday, and you know, I'll share my thoughts and directional bias on a higher time frame. But as you know, I'm much more reactive rather than being predictive. But yeah, so like I said, we'll end the video here, and if you did scale in and you caught the trade, well done. You know, there was a potential pullback that we could have taken from around here, which had tapped into this, you know, sort of imbalance area. But you know, there's no need to recap that, as I, you know, personally wouldn't have done that, as it was a Friday and we're getting later in the day. So yeah, enjoy the video, guys. Make sure you message me if there's any questions, issues, or anything like that. I'm always here to help, as I think that's the best way to grow. So yeah, have a great rest of your day, evening. Have a great weekend. Make sure you stay safe, and we'll catch up on Monday.